Traders, how you doing? And welcome back to my channel. In today's video, we're going to go through gold and silver, looking at the potential outlook for the end of the week and early on into next week. So if you do like it, hit that subscribe button. I also do a Bitcoin outlook. I do an SPX and DXY outlook, as well as a gold and silver outlook every week, as well as live streams on Monday, Wednesday, and Friday. Okay, so let's start with gold. So for the last 2 weeks, roughly, gold has been quite short. We can see here on the daily chart, impulse, corrective, impulse, corrective, impulse. Now, we had a decent bullish engulfer 3 or 4 days ago at this support zone. Notice that the last time we were here, where the market closed around this area, we had a decent reaction. So markets have a memory. People will remember that this happened before, which is probably why you got a decent amount of buying pressure coming in at this support zone and this big bullish engulfer. So that changes a little bit your sentiment from impulse, corrective, impulse, corrective, impulse. For this being another corrective to move to the downside, it slightly changes that, because this is not something you want to see if you're in trend continuation. So if we go to the 4-hour chart, this is where my bias has slightly changed from bearishness to possible bullishness in these commodities. We could be looking at a possible head and shoulders here. But for me, if we look at this larger V reversal from this day, so this big 8-hour push in gold, we've got a V reversal here and a possible ABC corrective. So A wave, B wave, and C wave here on this outside bullish engulfer on a little bit of increasing volume. Now, not only that, this pattern is a quasi-igniting pattern. So normally we have what's called a rising three, where we have a bullish engulfer, 3 smaller bars in between, and then another bullish engulfer. We can have 4 or 5 bars. Essentially, it's the same thing. It's known as an igniting pattern. So it's supposed to ignite moves in that direction, whether it be a rising 3, 4, 5 or a falling 3, 4, 5, which is obviously the opposite scenario. Now, not only have we got that, after this ABC, we've had a push on and tagged this resistance area again, reloaded back to the 20, and look to be pushing on at the time I'm recording this video. So this is good. As a breakout trader myself, the more times I see price trying to basically knock on the door of these resistance or support areas, and from what I've seen in my experience of my 6 years of trading, they seem to get less powerful as we go along. That's the reason why I like cup with handles, reversals, just showing increasing pressure into that area. So I think if we get a close above this resistance zone on this next 4-hour candle, depending on when you're watching this, that would be a decent sign for possible counter trend longs in gold, because this is not a bad setup. Again, we can look at it as a head and shoulders. What's the context of the head and shoulders, or the premise of the head and shoulders, is that it's a trend change pattern. So we're coming from a downtrend, we've got our head and shoulders, we're breaking out from this, yes, ABC, channel corrective, and it looks to be quite good for movement to the upside if we get that confirmation of a close above this resistance area. So my bias for the last 2 weeks, as I said, in gold has been short. It's slightly changing now with a possible confirmation of a close above that resistance area in gold. So watch out for that. But we have to remember, in order for us to confirm that trend change on this daily chart, we have to break through this downtrend anchor, which has a little bit to go. So until that happens, we still have to consider gold to be on a downtrend. But even on this daily chart, you notice some wicks to the downside, which should be a bullish indicator. We get above this 20, close above that 20 on the daily, it could be a decent sign, or maybe we're breaking out of this structure and now moving back up to the upside. But don't discount a possible pattern like this on gold, where we're getting our cup with handle for continuation shorts, because we know the dollar's been quite strong. The dollar and gold obviously have that inverse relationship most of the time. We do have NFP out tomorrow, so we'll have to wait and see. But in terms of intraday and shorter time frame, taking a long position on a breaking close above this area wouldn't be a bad shout for me. Okay, if we look at silver. So silver on the daily, the downtrend has been a lot cleaner. Impulse, corrective, impulse, corrective, impulse, corrective, impulse. However, similar with this, what we're getting now is slightly different to what we've seen the last 3 times. And again, a simple chart pattern, our head and shoulders is possibly forming here. If we notice on this daily bar, it's a hammer bar coming on a little bit of higher volume. So again, we have to remember we are on a downtrend, and that will not be changed until we break this swing. However, there is a case for silver longs as well as gold longs. At this point in time, the market looked bearish. However, buying pressure started to come in here. So in terms of a breakout retest, if this was to break out, retest this area and continue to the downside, this is price action I don't really want to see on a retest. I'm a breakout retest and a breakout trader. So I would never take a retest when price action goes like this, because it looks a little bit too bullish for me, so I wouldn't be confident taking a short, certainly after this 8 hours of price action here. So that retest obviously failed. We pushed through and we got into this ranging environment, back in between this resistance and support. Possibly, if you look at this 4 hour, again, another possible head and shoulders breaking out of this corrective from this bigger impulse. So it all looks quite good. Again, I would say wait for that confirmation of a close above this area before possibly taking long positions in silver. We do have that 200 as an area of dynamic resistance to price, which is quite a heavy area of dynamic resistance to price. However, I think with this whole structure, again, we can look at this as a larger head and shoulders. You can see it a bit more clearly on this 4 hour. My personal bias has shifted now from downtrend to I would rather buy these commodities than sell them at this point in time. But added confirmation will be breaking closes above those resistance areas to take those pairs long. So if you enjoyed that quick outlook, make sure you hit that like button, hit that sub button. If you are looking to take your trading to the next level, have a look at the link down below. We give a 50K FTMO challenge away to one member every single month. So if you're interested in that, click the link down below and I'll see you in the next outlook. Trade safe. Peace.